Welcome to this presentation by Development Initiatives. My name is Cordelia Lonsdale. Development Initiatives is an independent organisation focused on the role of data and information in ending poverty. Thank you very much for joining this presentation, which is titled Understanding ODA Loans. We recorded this presentation to present the key findings of our report, ODA Loans, Tracking a Growing Source of Development Financing. You can download this report at our website, www.devinit.org. Now I will hand over to Rob Chu, our Head of Technical Development, who will deliver the presentation. Thank you.
Thank you. So this presentation today will be covering three areas. First, the state of play on loans as part of official development assistance. So looking at recent trends in lending and also some of the things that are driving those trends. Then moving on to the current rules around ODA loans, so which loans are allowed to be counted as ODA, and also how those loans are accounted for in the statistics. And then looking at some changes to the rules which were agreed in the OECD at the end of last year. Now, these rules are probably the largest change to the definition of ODA since the concept was initiated back in the 1960s. So first of all, looking at the state of play, the first thing to say, and it seems an obvious point, is that there are such a thing as ODA loans. Much of the conversation around loans, much of the discourse around loans makes it sound as if all ODA is just in the form of grants. You hear many quotes like this. Danby Samoyo saying that over the past 60 years, $1 trillion of development-related aid has been transferred from rich countries to Africa. And again, Bilistally, the transfer of over 4.6 trillion in gross ODA. Words like that, transferred, make it sound as if aid is all just a grant, is all just money given away. But in fact, loans have been part of ODA from the very beginning. And indeed, toward the end of the 1960s, there was almost as much loans in ODA as grants. But in the decades that followed, grant giving, the growth in grant giving greatly exceeded the growth in loan giving. So by the turn of the century, loans were a much smaller part of overall ODA. But then if we look at the last 20 years for which we have data, you can see on this chart that the first half of that 20-year period, loans stayed reasonably flat, basically in the range 25 to $30 billion a year. Now that's all in 2013 current prices, constant prices. But if you look at the most recent part of that trend line, you can see that there's been a marked upward trend in ODA loans since about the year 2005. Loans come from both donor nations and from multilateral bodies. So you can have a nation state, a member of the DAC, giving a loan to a recipient country, but also those donors give funding to multilateral bodies such as the World Bank or the United Nations or regional development banks. And some of that money can then be passed on to the recipient in the form of a loan. One implication of this is that even donors who do not directly give loans are in fact funding ODA lending because they're funding multilateral bodies that in turn pass on loans to recipients. But not all donors give loans. In fact, loans are concentrated in just a very few donors. If we look at the countries that make up the DAC, the Development Assistance Committee, nearly 90% of loans from DAC donors come from just three countries, Japan, France, and Germany. There are 25 other countries that are members of the DAC, but about 11% of the loans that come from that group of countries. If we look at multilateral bodies, you can see there that 2/3 of loans from multilateral bodies in 2013 came from just two organizations. IDA, that's the soft lending arm of the World Bank, and the European Union. There were 35 other multilaterals that reported giving ODA in 2013, but because of that, they only accounted for just over a third of ODA loans. And then there are the countries that are not members of the DAC, but they report giving ODA to the OECD. And of those countries, those non-DAC donor countries, over 60% of the loans from that group of countries came from just one donor, the United Arab Emirates. So looking at those largest donors, we can see that increases in their ODA lending in the period 2005 to 2013. France, over 200% increase, Germany, over 250% increase, and European Union, nearly 800% increase. United Arab Emirates, from a fairly low base, massively increasing their lending as well. There have been significant but smaller increases in loan giving from Japan and IDA. But for those four countries that saw the very largest increase in their loan giving, France, Germany, well, those four countries and organizations, France, Germany, the European Union, and the United Arab Emirates, the growth in lending from those countries far outstripped the growth in grant giving. Indeed, in France, you can see that their ODA loans more than trebled over a period when their ODA grants actually fell by 5% in real terms. Looking at how this plays out in recipient countries, our research has actually shown that saw ODA loans grow faster than ODA grants. What we also found was that this rapid increase in loans was more concentrated among the countries that received the higher amounts of ODA. Now, on this table, there are the 10 largest recipients of ODA loans in 2013. And we can see that all of them saw extremely large rises in ODA loans over that period. In fact, 8 out of those 10 countries saw increases of over 100%. And 4 out of those 10 countries saw an increase in ODA loans of over 500%. The massive increase that you can see there for Myanmar, all of that really happened in 2013, when there was a debt relief deal which enabled Myanmar to start applying for loans to a number of donors, and the amount of lending in Myanmar has consequently gone up very steeply indeed. For other countries, the increase has been more uniform across that period. So that really was a quick run through the current trends in ODA loans, showing how they're going up and which donors and which recipients are seeing the biggest rises in ODA loans. What I'd like to do now is move on to a discussion of the current rules on ODA loans. So, which loans count as ODA? Well, there's basically 2 rules about this. For a loan to count as ODA, it must be for developmental purposes, which is the same as any other piece of ODA, but it must be at concessional financial terms. Now, how that is defined is that a loan is considered to be concessional if it has a grant element of over 25%. So that is what the current rules state as the definition of a concessional loan. But what is a grant element? Well, the first thing to remember is that it has absolutely nothing to do with grants. Some people, when they hear that a loan has got a grant element of, say, 50%, that in fact that was a financing package that contained half loans and 50% grants. It's not that at all. So what is grant element? Well, it's a little more complicated than that. And in fact, this is one of those wonderful formulae that economists are extremely fond of, and that is how you calculate a grant element. But really what you need to know is that grant element is the name for a standard measure of the softness of the level of concessionality attached to a loan. You could view it as the amount of money foregone by the lender by giving a loan at concessional terms rather than giving a market rate loan. The basic point is the higher the grant element, the more concessional is the loan, and the cheaper it is in real terms for the borrower to pay it back. There's three characteristics of each loan that affect the grant element. The interest rate, obviously the lower the interest rate, the softer the loan, so the higher the grant element. The length of the loan, in general terms, longer loans are preferable, and longer loans therefore attract a higher grant element. And grace period, which means a repayment holiday essentially. Are there any years at the beginning of the loan before the recipient has to start making repayments? But the grant element is also affected by this thing called the reference rate. If you're trying to work out how concessional a loan is, and one of the factors is interest rates, you also need to have an idea of a benchmark interest rate to measure the interest rate of the loan against in order to see how concessional that loan is. Now, in an ideal world, this reference rate, or the reference rate used in the calculation of grant element, should really be set at something approximating to market rates. But in the OECD's calculation of grant element, they use a reference rate that was set back in the 1970s when market rates were much higher than they are today. And the reference rate used by the OECD is 10%. The effect of that is that loans calculated with a 10% reference rate have a higher grant element than loans calculated with a more realistic reference rate. Then, well, that's how loans get to qualify as ODA, but if a loan meets the 25% grant element, the entire loan is included in ODA, so the entire face value of that loan. And what that means in practice is that if we have a hypothetical $10 million loan with a 90% grant element, that gets counted as $10 million of ODA in the statistics. But equally, a $10 million loan with just a 26% grant element, so this is a loan that is at much less concessional terms than the first example, but that also counts as $10 million of ODA because it still meets the 25% grant element criteria. But a loan of $10 million with just 24% grant element, which actually is really on very, very similar terms to the previous example, the one with 26% grant element, that third loan would count for no ODA at all because it does not actually meet the 25% grant element threshold. The other thing to understand, if we're going to make sense of how the rules are changing, is to look at how loan repayments are accounted for in statistics. So if we take a hypothetical loan of $10 million, and just to make the math simple, we'll say it's repaid over 10 years, and it's repaid in 10 equal installments of $1 million. And the first installment actually is in year one, the year that the loan is dispersed. Under the current rules, in year one, gross ODA would be $10 million, and net ODA is $9 million. So that's the $10 million disbursement minus the $1 million repayment. And it's net ODA that is used as the headline figure by the OECD for things like calculating the percentage of GNI that a donor is giving as aid. In each subsequent year, each of those repayments are also subtracted from the donor's net ODA figures. So that loan will actually have an effect of negative $1 million per year for each of the subsequent 9 years. That donor will no doubt be doing other things with ODA that will give their overall ODA a positive balance, but that one loan will actually account for negative $1 million of ODA per year. One thing to note is that those repayments that are subtracted from the total are only the capital repayments. Interest repayments are completely ignored in the headline ODA figure. And this is a weakness in the current statistics because there are about $5 billion a year in interest repayments that actually go from developing countries to developed countries, in just interest payments alone. And all of those are left out of the headline ODA figures. So, some problems with the current rules. As we've seen, highly concessional loans count the same as loans with low levels of concessionality. So in the example I gave earlier, the loan with 26% grant element was likely to be rather more expensive for the recipient to pay off, but that counted just the same as the 90% grant element loan in the ODA statistics. That reference rate of 10% inflates the grant element of loans. As I mentioned, if you use a higher reference rate, you get a higher grant element when you run that calculation. And this means that even some loans that are more or less at market rates can meet that 25% grant element criteria and then get included in ODA. And another thing to note is that the same rules are applied to all developing countries. So as long as a loan makes the 25% grant element criteria, that counts as ODA, and it doesn't matter whether that loan is given to a fairly economically strong developing country that can afford to pay off a not very concessional loan, or whether that loan has been given to a country with extreme economic problems and extreme problems of poverty. So now we'll move on to looking at the new rules and how the measurement of loans is changing in ODA. This is the timeline for the new rules. As I mentioned, the rules were proposed and accepted at the end of last year, December 2014, at the OECD DAC high-level meeting that was held then. The OECD are currently working on the fine print of the new rules, and they are due to publish their reporting directives at the end of this year. And then in April 2016, the ODA data for 2015, for the current year, will be reported for the first time, and it will be reported using both the existing and the new method of valuing loans. And that will be the case for 2016 through 2018. That data will be reported in parallel using both the existing and the new rules. But then, from April 2019, when the data for 2018 is reported, the new rules will be the only source of data for ODA loans, and reporting under the current rules will be discontinued. Although the DAC will still continue to publish a cash flow measure of ODA, which will show the repayments made, but again, just the capital repayments, and it will leave out the interest repayments. So how are the rules changing? The first very large change is that only the grant element percentage will count as ODA. So if we think back to those examples I gave earlier, the $10 million loan with 90% grant element, that will count for $9 million of ODA. The $10 million loan with 26% grant element, that will be $2.6 million of ODA. And also, the loan that counted for no ODA whatsoever, the one that had 24% grant element, that could count as $2.4 million of ODA. So the grant element will determine how much each loan is counted as ODA. But we're not applying the new rules, or the new rules will not be applied uniformly to all countries as they are at present. Loans to the least developed countries and low-income countries will in future have to have a grant element of at least 45% rather than 25% in order to count as ODA. So the poorest countries will get the softest loans. And loans to lower middle-income countries and upper middle-income countries will have to have a 15% or 10% grant element in order to be counted as ODA. So the bar for those countries has actually been lowered. The reference rate's changing as well, and what is being instituted here is a suite of reference rates depending on the income grouping of the recipient country. If a loan is given to an upper middle income country, the grant element will be calculated using a 6% reference rate. For a lower middle income country, the reference rate will be 7%, and for a least developed or low income country, the reference rate will be 9%. The idea of the DAC here is to actually reward donors for taking a larger amount of risk in lending to the poorest countries. So that does mean that if a donor advances a loan to a least developed country or a low income country, provided that loan meets the 45% grant element criteria, if they advance the same loan on the same terms to a middle-income country, they would actually be credited less ODA than giving that loan to a low-income country, because the higher reference rate for low-income countries will mean that that loan comes out of the calculation with a higher grant element. And another very large change is that repayments will no longer be subtracted from headline ODA. So when a loan is counted in ODA, it will be just, in the headline figure at least, it will just be the grant element of the loan that's counted in the year that the loan is dispersed, and there'll be no subtracting of repayments in subsequent years, as is currently the case. So what is the effect of the new rules? Well, the DAC's official line is that it will have a marginal effect on overall ODA levels, that reported ODA will be about 4% higher across all DAC donors than under the existing rules. So we checked this, and we examined data on all of the ODA loans that were agreed in 2013, calculated the grant element for each of them under both the existing rules and the new rules, and then worked out an estimate of how much ODA would have been reported by each donor if the new rules had actually applied in 2013. And what we found is this, that the total ODA from DAC donors would have been about 4.6% higher, so roughly in line with what the OECD are predicting. However, that's the aggregate figure, and that masks massive variation between donors. Japan's ODA in 2013 would actually have been reported as over 50% higher if the new rules had applied. The reasons for this are Japan's loans are actually among the most concessional of all DAC donors, so they would not have been too badly affected by the fact that only the grant element is being counted. But also Japan is in receipt of large amounts of repayments every year on old loans, and the fact that those old loans are no longer having their repayments subtracted from the total is causing Japan's ODA to apparently be much larger than it is under the existing accounting rules. Conversely, ODA from Germany and France has reduced significantly. So Germany down 5%, France down 4%. And this is because Germany and France, their loans are typically at much lower levels of concessionality than Japanese loans. Now the USA their ODA would have been over $500 million higher, 2% higher in 2013 if the new rules had applied. But the USA don't currently give any loans at all. The reason for this apparent increase is that the USA as well is still getting some repayments on old loans made years ago. And again, those repayments will no longer be subtracted from the figures. IDA, the World Bank, their ODA would be up about 15%, and the European Union would actually be down over $2 billion, down 13%. And the United Arab Emirates would be down about 25%. So, some final things to note. The new rules are certainly fairer in one key respect. More concessional loans will count for more ODA, whereas at the moment, as long as the loan meets the 25% grant element criteria, it counts the same, regardless of how concessional it is. The effect on donor behaviour will need to be monitored. Some donors have argued that the new rules will free up more grant money for the poorest countries because they are now able to count as ODA less concessional lending to middle-income countries, so they'll be able to give harder loans to middle-income countries. But the money generated from those loans could be used to give more highly concessional funding and grant money to the poorest countries. On the other hand, the fact that donors will get credited with more ODA for a loan to a low-income country than they would if they gave exactly the same loan to a middle-income country, that could create a perverse incentive to actually give more loans to the poorest countries. So this will need to be monitored extremely carefully over the coming years. The fact that capital repayments on old loans will no longer be subtracted from the figures is, in some respects, a distorting factor. So there are loans that are being dispersed in 2013, 2014 that may not even have had any repayments made on them by the time the new loan rules come into effect. And those loans will have had their full face value counted as ODA and no repayments subtracted from them. So if you look at the amount of ODA going from a donor over time, it could look as if that donor was rather more generous than they would look either if the old rules had been applied consistently or if the new rules were in force. And some aspects of the rules are yet to be decided. Crucially, the rules on accounting for debt relief have not yet been agreed. At present, if a loan is subject to debt relief, all the outstanding capital and any outstanding interest is added to the donor's ODA and is counted as ODA. In future, that is obviously going to have to change because the original loans will only have had their grant element added to the donor's ODA in the first place. But this is at present being discussed within the OECD. What I'll do now, just for a brief period, is demonstrate our development data hub. This may be of interest to you because it can actually be a place where you can go to for data on what loans are going to which countries and what sectors those loans are being used to fund projects in. It's all based on OECD data, but it's been repackaged into an interactive website which you can explore yourselves. So if I now just change screens to show the Development Data Hub. This is the front page of the Development Data Hub. As you can see, it's a world map, and each of the countries here, you could click on any one of those and go into a country profile showing information on government spending, international flows to those countries, and a number of socioeconomic indicators to show levels of poverty, etc. But I won't show you that at the moment, because another tool on this, if I hover over the Explore the Data element in the menu there, and then pick Unbundling Aid, another tool on the Data Hub is this, which essentially allows you to explore the ODA that has been given in any year. Clicking on the Explore button here shows all the countries that received ODA in 2013. If I pick one of those countries and just click on it, Vietnam, for example, it then shows the donors that gave ODA to Vietnam in that year. And you can see this sentence at the top has started to change. It now says ODA in 2013 to Vietnam from all donors. If I click on Japan, we drill down another level into sectors. And so you can see that most ODA from Japan went to the infrastructure sector, some to environment, general budget support, water and sanitation, agriculture, industry and finance. If I click down here on industry and finance, I then get this element here in the form of, and this shows the modality of the aid that went to that sector. So we can see that of Japanese aid to Vietnam, to the industry and trade sector, the majority of it was in the form of loans, this red box to the left. But there was a significant proportion of it, just over a quarter, in the form of technical cooperation, and then about a fifth of it was in the form of cash grants. And the last level of drawdown is via channel, it says here, so basically which organizations will use to implement that. If I just click on this from technical cooperation, you can see what that shows under there. You can see that most of the aid to industry and trade to Vietnam from Japan went via the public sector, the recipient government. But some of it went via private sector organizations or think tanks, and a small proportion went via NGOs. Now, we can go back up the levels that we've drilled down by clicking this back arrow that appears in the top left. Now, what's particularly useful about this tool is that this sentence at the top, we can change the order in which we drill down. So, if we wanted to see all of the loans to Vietnam and the sectors that they went to, I can click and drag this part of the sentence in the form of, and put that in the second place, there, and then click and drag sector and put that next. So now, when I click Vietnam, rather than showing the donors, it shows the modalities. And you can see that 4/5 of aid to Vietnam actually was in the form of loans or perhaps equity investments. If I want to see what sectors they went to, I can just click on that and you can see how much went to infrastructure, how much went to water, and so on. And then if I wanted to see which donors were giving loans to the infrastructure sector in Vietnam, because donor is now next in the sentence, I click on that and you can see that the amounts that came from Japan, IDA, South Korea, the Asian Development Bank, and so on. So that is our Development Data Hub ODA Loan Explorer, and please feel free to use that. That's on our website at devinit.org/data. And with that, I'll hand back to Cordelia.
Thank you so much for listening to our presentation. We hope you found the information and data that we've shared useful, and that you also go and have a play with the Development Data Hub. We really welcome any questions, comments, or feedback that you have. Please do contact us. And if you'd like to read the full report, ODA Loans, Tracking a Growing Source of Development Financing, this can be accessed on our website. Thank you for listening.